Hey, good afternoon, everybody. Well, it's still not afternoon yet, but let's call it early, late morning. Um, well, it's late morning and it's early afternoon, I guess. Well, I'm mixed up. The market's mixed up. Kind of makes sense. Um, doesn't really make a lot of sense what happened yesterday, but we'll talk a little bit about what it might have looked like and why it might have looked like and what it did. So we'll take a look at some charts. What was most interesting was the flip in the Dow Jones Industrial Average and also the complete crazy flip turnaround in the Nasdaq Composite and the Nasdaq 100. The triple Qs were evident of that. And by the way, a little bit of an interesting note for you on that when we get to the chart. Right now, the Dow's up over 300 points. The Nasdaq is just about the flat line after being down most of the day, trying to recover. Dow showing tremendous strength today. We got some good large cap stocks making a decent move today, helping the Dow Jones Industrial Average. It's up 1.15%. S&P 500 up 0.5%, just a hair under that. And the Nasdaq Composite, again, pretty much just towing the flat line right about now, just a shade to the downside, but hardly anything. So we'll see if we can make the comeback after yesterday's 2+% tumble. Now, I'm going to ask you guys if you're seeing my screen, because I'm showing it's pretty dark on my screen, and I don't know if that's a reflection of something going on my computer or whether you're coming across, if it's coming across clearly, but because it certainly is awfully dark all of a sudden. It was bright, and then as I just hit the live button, my screen just went dark, and I'm looking at my picture in the screen and it's awfully dark, and I see that Ken sent a message and that's awfully dark there. So I don't know whether you guys are seeing me clearly. I'll put a light on if you are not, so somebody give me a heads up. I'll appreciate that greatly. Thanks. So we got some pretty interesting earnings today from the banks. Let's start with the absolute loser, Wells Fargo, which you all know that I like, and I still like, and I'm probably going to buy some more. But my basis is fairly low. It's lower today if I buy more. But Wells Fargo, to me, the biggest disappointment was the dividend cut from 51 cents to 10 cents. That was devastating. I thought they would cut about half. I thought if they were to cut the dividend half and the yield would come in around 4% or even a shade under that, then that would be a great opportunity to add to the position, or if you didn't own some Wells Fargo, to go in. But they really sliced and diced the dividend pretty hard. And the fact that they are also adding to their loan loss provisions, which wasn't surprising, but baffled some people as to why they would be adding as much as they did. JP Morgan Chase also added an awful lot. But the problem with Wells Fargo appears to continue to be the management of the company is just horrendous. And by horrendous, I mean doing everything wrong, can't get themselves out of the way of the regulators, aren't addressing the regulators' issues. And what's missing really is a top-down change. And I don't know who would make a great CEO, but it would have to be somebody of tremendous gravitas, to lead the bank, and for the regulators to take notice that whomever is going to take that mantle up will be someone who is capable of turning around the culture and doing it quickly. Otherwise, the assets that the bank has in terms of its locations, in terms of its branches, in terms of its business lines, tremendous assets. The problem is management can't pull them together, and the bank is suffering reputationally. It saw a loss of deposits it lost about 4% on its deposits. So to have a 4% decline in your deposits when all the other banks are seeing meaningful increases in their deposits over the quarter just is a terrible sign. So we got a couple of questions here. Ruby's asking, are we going to have a vaccine madness for the next 6 months? Yes. And can we still follow the Fed? Well, we have to still follow the Fed. And as far as the Fed, I'm going to be on Charles Payne's show this afternoon, and I know that in the studio, the producers were talking about that, and they reached out to me for my thoughts on that. And the question is, what if we start to see some inflation? Do I think the Fed will react, and will the Fed be less accommodative if we start to see some inflation percolating? My answer basically is no. The Fed is not going to be less accommodative. They're going to continue to be as accommodative as they can, as they have to be, and they're going to worry about inflation down the road. They're not going to change what they do and certainly stop supporting markets, stop supporting the corporate bond market, stop supporting the government by buying its debt for the sake of some inflation, which frankly hasn't really percolated to any meaningful level yet. So even if we get to the 2% inflation that the Fed has targeted for years now, which is, again, a made-up number, it's a complete line in the sand. It means nothing. 2% inflation means absolutely nothing. People don't understand, because everybody thinks, oh my gosh, the central banks around the world are trying to get inflation to 2%, and they're going to continue to be accommodative until that happens. 2% is a made-up number. It's a number that the central banks recognized they could not reach for years, and that gave them latitude to continue to do what they did, which was things like quantitative easing and supporting the banks under the ruse that, well, we need to do this because deflation is worse than inflation, and there is no inflation in sight, and we're worried about deflation. And if we don't do this, we'll head into a global depression. No, it was really about the 2008 financial crisis and fixing the banks and supplying them with unlimited amounts of money so they can return to profitability. They did so in the US. And not so much in Europe. But that's really what the whole accommodative posturing was all about. And now the Fed is stuck with that. Most central banks are stuck with that as an albatross, like an albatross around their collective necks, if you will, and there is no backing away from that. So if we reach 2%, it won't mean anything. They'll move the target, and they'll still continue to be accommodated because now they have to be. There is no turning back now. So plain and simple, the Fed is going to continue doing what it has been doing. And that, of course, bodes well for the markets. So speaking of the markets, hanging in there today, and let's talk really a little bit about yesterday. What happened yesterday was pretty crazy. Was it about was a reversal in the Dow? Was the reversal in the S&P? Was the reversal in the Nasdaq? Was that about more lockdowns coming? Was that about spikes in the coronavirus pandemic? Certainly in 32 states are seeing spikes, meaningful spikes. Or was it about the US and China doing some heavy saber rattling? I think more the latter, even though there was certainly some degree of fear that the COVID crisis was not abating. And if things are going to get worse before they get better, perhaps we will see longer lockdowns. But we know the market's already digested that. The market already has a playbook for that. And we know that the market knows that there's going to be another side of it. Even if the other side of it is ugly, there's going to be another side. And the markets are expecting this president and this administration to try and open things up, keep things open. That includes schools, and move the economy along. Well, he's going to do his best at that. And I think the administration is certainly towing the line on that. I don't know if that's the best thing for the country. I don't know if it's the best thing for the health of the citizenry, but I do know it would be far more beneficial to the economy to try and keep things open than closing any parts of the economy, or certainly all the economy or most of the economy, down. We know that. So markets know that too, and that's why they continue to go up in the face of bad and worse news almost daily in terms of the spikes we're seeing around the country. So that makes sense. Pretty much, here's the playbook. Been there, done that, know how to work it, know how to operate it, know what's going to happen, and the markets are reacting thusly. So yesterday was interesting on all those levels. It was also interesting because it was the day before some very big earnings releases. I'm talking about JP Morgan, talking about Delta and Wells Fargo and some others. But the market is also in earnings mode already. It's already sensitive to what are we going to do? How are we going to react? What are investors going to do? And for the most part, I think we know what the playbook looks like there too. Analysts have beaten down expectations for Q2 earnings. As they come out, if they traverse the low hurdles that the consensus estimates allow them to traverse and hurdle easily, then better than expected earnings usually bode well for stocks. They usually climb. Even though the numbers, the absolute numbers, are terrible, going to be horrible. For example, Delta's revenues were down about 89% this quarter over the second quarter a year ago. Tremendous losses there, over $4 billion in losses. Just devastation across the board, and also their outlook was negative. They talked about in the conference call, Delta talked about the fact that they had while they had 100 planes in the air on a daily basis in around April, they expected 1,000 planes a day in the air by July and August. Okay, they're nowhere near that now, and they've ratcheted that down to maybe 500 flights a day. So tremendous reduction in their expectations for getting passenger miles up. So not good for Delta. The only good news for Delta is that they have provisioned, they raised some debt, and they have, according to them, enough liquidity to last them at least 12 months. Their daily loss is down to, I have some staggering numbers because when it came out, I was just floored. Delta was losing $100 million a day in April. Their daily loss now, the cash burn, is $27 million a day, down from $100 million in just April. So just absolutely devastating losses. So they lost $3.9 billion in the quarter, and that I thought would be worse. But certainly taking the stock down. The earnings per share, $4.43 a loss versus estimated loss of $4.07. So worse than expected, and also paying the price because they're worse than expected. So this is what we're going to see during earnings season. You go worse than expected, and we know the expectations are low, then you're going to get hit. Delta's down about 3.75% right now. Going back to Wells Fargo, just terrible numbers there. Revenue was $17.84 billion. That's down 17% from the second quarter of 2019. That's a huge drop in revenue, absolutely huge. And the bank got pounded because it was down at 7% at one point. It's back now to just down over a little over 5%. But I think the banks are a buy down here. I think the dip that they're seeing and have seen may continue. I think going into the remainder of the earnings season, I think we're going to see worse news than expected, and the market starts to get a little soft. The banks will certainly come down, but I think at some point, probably, and I'm not if they come down, but if they do, I think at some point, all the banks look pretty good on a book basis. Their price to book for the banks is they're all cheap, not as cheap as they were in 2008, mind you. They're about literally twice as much on a book value basis now as they were in 2008. So they were really cheap in 2008, but right now on a relative basis, certainly relative to all the other stocks in the market for the most part, different sectors, they are pretty darn cheap, and some tremendous bargains out there. JP Morgan Chase had really good earnings relative to street expectations and relative to what they could have been. So the stock has done very well. Take a quick look at JPM. and stock is up. It was up a good, up almost 2%. It's up about 0.5% right now, but certainly really did very well. We know that the stock was going to take some kind of a hit or just be soft based on the fact that if they didn't beat by a good margin, we know the absolute numbers are going to be bad, and the absolute numbers were bad. They came in at $1.38 per share versus a year ago they made $2.82. However, they didn't have a loss, certainly made some money there. The revenue was great. The revenue came in at $33.82 billion versus an estimate of $30.57 billion. So just hit it out of the park on revenue. Their deposits were up. Their fixed income trading business was up 99% profitability, and the equity business was up 30. I think it was 38%. So extremely strong trading results, which we'll see from most of the banks that have active trading arms. And believe me, if you didn't make money this last quarter trading everything that these banks trade, knowing the flows that they see, you don't really have an excuse. So I expect the rest of the banks and Morgan and Goldman to show really good numbers. Bank of America also to show good numbers. So they're all starting to look relatively cheap. And I still like Wells Fargo. I'm willing to take a little more pain with Wells Fargo. I believe it can get down to its 52-week low around 22 and change, and certainly would be a buyer there. Again, this is the banks right now are a long-term hold for me or for you, or for anybody who's looking at them. They're not a trade. It's not a Tesla. Tesla is, to me, it's become a day trading stock. It's just so out of control. However, if you own it long-term and you don't bother looking at the daily machinations, then great. You've picked a winner, because it's been just beyond extraordinary, so much so that you have to scratch your head and wonder what's real about it and what's not, because there are aspects to the movement in Tesla that certainly give me pause and would give a lot of people pause. Just can't bet against it, because that just hasn't worked. All right, let's get a couple quick questions in. And I'm leaning in, guys. I'm sorry. My screen has gone dark. I don't know. This is the new computer, so I don't know why it is fading out. Sebastian, would like to ask you your opinion on. I'm going to have to try and figure out why this screen is so dark. So let me try and put some light on it and see if that helps me read a little better. All right. All right, Sebastian. Sorry about that. Opinion on. We got a bunch of them here. So let's go to MasterCard first. MasterCard, you have to like MasterCard. It's just long term. Its fee structure is just so impressive, and yeah, I like it long term. It's a little rich, but it does trade a little bit on the rich side. I'm talking in terms of its price earnings multiple. It's at 37 and change, and dividend yield is weak at about 0.55%. But I do like it. It's just a little pricey for me right here. It's a long-term hold for sure. It's not one of my favorites long term. I think your capital might be better applied elsewhere. But if you own it, there's no reason to sell it. You also want to know about, it's the same thing for Visa. Sebastian, Visa again, similar situation. We're looking with dividend 0.63%, PE is 35. The stock has acted the same way. Again, I don't know how much higher it has to go. Yes, it's got room to go on the upside. Is it going to double from here in the next 2-3 years? I don't know about that. I think there's going to be other payment services that are going to encroach on both Visa and MasterCard's territory. And I think some of the fees might come down. So while they've been great stocks long-term, they've been absolutely fabulous, I think they're running out of steam. PayPal still got some room to go. So let's take a look at PayPal. PayPal acts like a growth stock, and it was doing a whole lot of nothing. It's caught fire after the crisis, and it's just hit it. Just really stocks just shot to the moon. Is it a little overdone? It looks to be a little overdone. The ride, may be over for a while. It's extremely expensive at a PE of 107 for what it does. I don't know that the stock justifies that kind of price earnings relative to other opportunities in the market. So it's had the run. If you caught the run, great. I don't know that I jump on it here. I might look to see if it comes down a little bit. They're creating a lot of deals. They're working on a lot of deals with a lot of partners, and that's maybe a lot of what's built into the stock. Some of those deals we'll see, some of them we won't because they may not happen. But I'd just be a little leery of the stock. It's come up a little too fast for my liking, and it looks a little toppy. So that's my opinion there. And last, we got Square. Just you're hitting all of the payment companies. Square, same thing as PayPal, just had such a crazy run, and everyone thought, okay, this is the way it's going to be for some of these, for PayPal and Square especially, and the coronavirus is going to help them as people are going to just want their services, and makes it easier and is cheaper and so on and so forth, and especially businesses who might want to have the Square service. So yeah, the reasons pretty good, sound for the most part, but the stock has moved too far, too fast, in my opinion. It's made a kind of an ugly turn off of the top, and I'd be apprehensive about this thing being able to rally a whole lot from here, based on the run it's had. It looks a little tired, and if I had profits in here, I'd consider starting to take them if I didn't already, because when a stock turns the way this has turned, to me, that's a sign to take profits right away. And I would take profits in something like that. I would have taken profits probably in PayPal had I been in it, and I'd be looking for it to come lower if I still like it and buy it in later. But yeah, you'd hate to see a run like this and with you leaving profits on the table. So if you own it, just be mindful of your profit position there. Pat is asking WFC buy now. I think so, Pat. Yes, it's the stock can go lower. The 52-week low is $22. All right, I believe that the stock can get there, because we are just going to see, as earnings come out, how bad it's going to be. As we start to see some of these companies' positions and the losses that they're going to show, I think the banks are going to get a hit a little bit more, because I think the public is going to realize, investors are going to realize that, oh boy, things aren't really, we haven't turned the corner. Everybody knows this is probably the worst of it, but it may not be for some companies. For in general, I think for the market, for the companies in the marketplace that we talk about all the time, is the second quarter the worst? Yes, it's the worst. Will the third quarter be as bad? Probably not. Probably be better for sure, but how much better? And for some industries, maybe not so much better. That's a problem. That's a problem for the banks. That's going to be telling, and I think the banks may have further to dip. Me personally, yes, I would buy Wells Fargo here. My big disappointment, as I said, was the cutting of the dividend. They just ripped it from 51 cents down to 10 cents. So I thought they would cut it about maybe 50%, and I was wrong. So I still like the stock. I still think 3 to 5 years, the stock is in easy double, easy. So yes, I'm buying more down here. But then again, I wouldn't be surprised if Wells Fargo tests its lows at 22 and then maybe breaks them. So if you're going to buy Wells Fargo, take a starter position now. That would be my advice. That's what I recommend. And I talked to a hedge fund friend of mine today, and we talked about Wells Fargo, and that's what he's doing. And I like that idea. Take a starter position, as he called it, and then add to it if it goes lower, because long term, he agrees with me that it's a long term hold, and it got plenty of room to go on the upside. It's all about management for beleaguered Wells Fargo. So yeah, I like it down here. Is it the best of the banks? No, it's the worst of the big banks. and the stock price reflects it. So there you go. That's my opinion on Wells Fargo. If you can stand a little bit of pain, then yeah, give it a go. Ruby, what will it take to catch up to reality? I'm guessing you may be meaning the markets having moved as robustly as they have. Yeah, November could certainly be a gut check. Now there are some surveys and polls, and some analysts are saying that a Biden victory wouldn't be so bad for the market and may actually be good. So there's some quarters where that sort of rhetoric is starting to percolate, and I don't know that that's true because I haven't seen the details of some of Joe Biden's platform initiatives that he rolled out the other day. There's just not a lot to go in there. They're a little too broad for me to understand how they're going to impact the market, and certainly taxes, et cetera. But yeah, November could be right, and before November. But November for sure could be a reckoning if we get some radical changes in Congress and in the presidency. It's really going to be a grab bag. Let's see. Sebastian asked what's about Chinese stocks. Okay, good question. The rhetoric is heating up between the U.S. and China, and now the U.S. is pushing back hard on China's expansion of its claims in the South China Sea. That has been brewing for some time, and this administration pushing back on there is not unexpected. It's not unexpected now. The president is trying to pile on, and this is part of what he wants to look like in terms of being strong versus the Chinese, because the Democrats aren't going to push back. They aren't going to say, no, you need to lighten up on the Chinese. They're going to be sort of supportive, at least, that the Chinese aggression and expansion militarily is problematic long term. And based on what they've done to Hong Kong and Taiwan, and what they're planning on doing in terms of expansion and building islands in which they can land their aircraft on and dock their fleets, problematic. So the Chinese stocks might take a hit because of that. Baba, is great as a company as Alibaba is certainly prone to that. Investors could take a dislike to Alibaba. The stock certainly just been, just crazy tear, absolutely fabulous run. However, it's made this ugly turn. A lot of these stocks, this is what's starting to look a little bit heavy here for the market. A lot of these stocks, and we're going to take a look at a bunch of them in a moment, are starting to look a little odd in terms of the quick turn they've made, which is in some respects ugly. And Alibaba's turn is ugly, just kind of like Square's turn was ugly in the chart. PayPal's turn was a little disruptive, but Baba's is pretty ugly. It's pretty dramatic. So again, if you have lots of profits here, there's no harm in taking your profits and reconvening lower if the stock goes lower. If everything smooths out and cooler heads prevail, which I don't think that's going to happen, Bob will go back up. You can always buy back in even at a higher price. If it's going to continue to go higher, it doesn't really matter. You just want to get in. However, I like taking profits when I have them, especially when conditions become a little more disjointed and a little less secure in terms of what our expectations might be. So that's it for Baba. Baidu, same situation with Baidu. Again, it just had a really nice bounce off the bottom. It didn't perform as well as Alibaba off the bottom, but it's also made that ugly turn. In fact, I'm going to jot these down. We're going to take a look at some of these because the turn on some of these is pretty dramatic. And we'll take a look at those, and we'll look at Square, and let's go on to what's next? Last but not least, you got JDs. I'll do a quick comp on JD. JD.com, you got the exact same situation. And we'll take a look at that also, simply because they're very similar trading. The way they're trading is a bit worrisome. Sergio, big tech sell-off, just profit taking right now? Yes, it's profit taking. Rebound before Friday, had Microsoft calls that were firmly in the money, but not now. You like Microsoft long term? When you're playing the options market, Sergio, sometimes timing it just kills us. Believe me, I've experienced that a few times. But I love Microsoft long term. But I think we're going to see a little profit taking in here. And the reason is, again, part of it is China. Part of it is, are these tech companies is China going to retaliate against the US tech companies? We know that Europe is putting pressure on the tech companies for taxation and for security reasons and for other reasons. So they're under pressure. There's also pressure here from the Justice Department looking into Facebook, looking into Google, there's some stuff going on here. It's not smooth sailing for all the big techies. And investors may be starting to wonder if the ride is going to slow down, and that might be just an opportunity to take profits. So on that, what happened yesterday with the Nasdaq Composite, we're going to take a look at these, and the Nasdaq 100 is something that I don't recall seeing before, maybe once before. That is Nasdaq Composite and the NDX, the Nasdaq 100, were up more than 2%. They ended the day down more than 2%. That kind of reversal, we haven't seen that kind of reversal. Oh, and by the way, that's after making new all-time highs. Now, the Nasdaq 100 made new all-time highs yesterday by 2% and ends up the day down. The last time that happened, 2000. Yeah, the last time I recall that happening was 2000, and that was just about the crescendo of the big run. It got bad from there. It started to crumble from there. That was pretty much the warning flag. Is this the warning flag? Was yesterday the warning flag? Don't think so right now, but I got my eye on the Nasdaq Composite and the NDX, which we can watch by looking at the QQQs, and there may be some opportunities there if there's going to be more profit taking, because some profit taking there could turn quickly into a bit of a rout. We saw that yesterday. For the market to turn down as quickly as it did, it was dramatic enough that the Dow lost, was up 563 points and ended up down. Well, down slightly, pretty much on flat line. What was far more dramatic was the Nasdaq Composite being up 227 points, reversed 434 points, ending up the day down 226 points, down 2.13%. Now that's crazy. When the leadership, and it was led by Tesla, but Tesla wasn't alone in moving the composite or the NDX. So something to be cautious about. Let's see. So hopefully, Microsoft, I tell you, Microsoft, I'm not sure what calls you have. There was some hard profit taking on Microsoft yesterday too. I mean, they all got hit. Can we bounce back? The Dow saying we can. The S&P is saying we'll probably shake this off, but the Nasdaq isn't so sure today. And if the Nasdaq weakens going into earnings, is that a sign that investors are afraid that the big leadership tech companies won't beat? Yes, I think it's a huge possibility, because their estimates were not knocked down. They were hiked by analysts, okay? So they have higher hurdles to get over. If they disappoint, yes, they could get hit. Yes, the Nasdaq Composite could get hit. Yes, the triple Qs could get hit. Yes, that could bring the market down, unless we see rotation into other sectors, which we have in the past when on a few occasions the Nasdaq Composite faltered. But we're not there yet, but we're certainly going to keep an eye on that. because big tech is really going to run the show for the most part. If it continues to lead, then the market can continue higher. If it falters hard against expectations and earnings miss, then we may be in for some profit taking. So that's, hopefully that answers. Microsoft, I don't know that it can make that turnaround. I'm not sure what setup you have on your call, Sergio. But earnings could turn it around. So let's keep our fingers crossed for you on that. Ruby, we're going to have a vaccine matters for next 6 months, and can we still follow the Fed? I think I answered that. Yes, we can still follow the Fed because the Fed's not going to change course. If it does, then something's really wrong. Ken, wonder if my long on RDWR option, read Tom's trade this morning, went through. Don't know about that. Hopefully it did. Hopefully it's a good position for you. Well, let's take a quick look at some charts, and then I'm going to come back and see if there's any more questions. But I want to have a quick look with you guys at what I'm looking at in terms of the majors and some of these ugly reversals that I'm seeing. And we'll talk just for a second or two about Tesla. So, but it's going to be kind of quick on all of these. Kind of be like the lightning round. So let's take a look. All right, first up, we got the Nasdaq Composite here. Now you can see from this ugly day. They went, wow, just absolutely soared, made new highs. I mean, just absolutely stellar morning, right? Up pretty much to almost to the top of this uptrending upper bound of the channel. And what happens then? Good night. Led by Tesla, but obviously it wasn't just Tesla bringing the market down, the composite down to 434 points down, ending the day down 2.13%. So it had to be a lot of selling. That's ugly. Now we're not in danger yet, and we're concentrating on the Nasdaq because we know, as we call it the market bellwether for the most part. We know that we're not out of the woods, but we're certainly not in trouble. So is there anything to worry about right now? No. But all along, we've known, just try my mouse, see if that's working. All along, we know that there is the possibility that at some point we're going to see a little bit of profit taking. Why not? Because there are so many profits on the table. So we're fine here, but this is a pretty ugly move today. We see that now. We're struggling to stay above the flat line. We are above it now. We're up about 0.2% on the Nasdaq. So if we close up there, then we're still in the channel. No harm done. Just a lot of ugliness. That is telling. And what does it tell me? It tells me that there's a lot of investors willing to take profits if things don't turn out. And by the way, volume-wise, yesterday on the composite was a lot heavier than it's been. So I'm not talking about 15, 25% more, but it was more than it's been over the last few weeks. And based on that and the actual reversal and the tone, kind of keep an eye on that. Real quick, we'll take a look at where we are with the other indices, the majors, Dow Jones. Here we are again yesterday, breaking above there, intraday, above its 200, really positive, only to end up the day on the downside. Now we're flirting with closing. If we can stay where we are here, we can actually close above the 200-day, and that would be bullish, and we'd be above that sideways channel that we're in, heading back up to fill this gap here, which really we're talking about getting above 26 27,886, and we're going to try then, I think, make a run at 27,557 thereabouts to make a new, at least get up to the old highs. That would be a positive, and certainly the Dow needs to do that. The S&P, but again, we're above the 50, we're above the 20 today, and we're above the 200 if we close above there. So that let's hope that happens, because that bodes well. Now, another thing that a lot of folks are looking at is the double top we might be making in the S&P, which would be a little scary. So we're looking at, again, what happened yesterday. Tremendous, just a huge breakout, pretty much coming up here and getting close to making this top and faulting. So we got up to where we needed to get to, and then what happened? Just absolute collapse. So is that a problem? Yeah, that's a problem. That's a problem, because if we can't get above that, then we're either in this channel, and worse, if this is a double top here and here, and this becomes the neckline, roughly we're looking around 3,000. We get below 3,000, it's game over. This rally has just probably run its course. So that's kind of where we are. We're obviously not near there yet. However, we could get there, and that's worrisome, because that formation, a lot of technical analysts are looking at that. A lot of traders are looking at. A lot of people are talking about the double top and what it could mean if we cannot break out of there. So far so good. We're still outside this channel, but we did break above and back into it yesterday, and then we're below it today. So that's not good. It's good if we can get above it and stay above it, and certainly it'd be good if we can break above. We'll call it the 3240 range, and break out above there for the year would be very positive. But we're not there yet. All right, real quick, let's have a look at the banks. Wells Fargo just making a comeback. Again, I've talked about financials being weak, in my opinion, and prone to being sold down. Certainly, we broke through this, and again, not unexpected. I have said it would not surprise me to see Wells Fargo challenge its 52-week low. However, and this action obviously is ugly, and that's obviously a result of the earnings today. But to me, long-term hold, yes, all day with Wells Fargo. Just got to have your patience. JP Morgan Chase, now just really terrific out of the gate. Set the tone for the market this morning, and just it's not quite able to hold on to its gains, but nonetheless looks pretty good. Okay, looks pretty good. If it can hold up here and stay above its 50-day moving average, then pretty good. I'm not so sure it can. Again, because I think the banks are going to be under some stress as earnings roll out, and as companies have worse than expected earnings, the banks are going to get hit. If the market comes down, the financials are coming down. So if you're looking at any of the financials, just leave some capital. Don't put it all in now, because I think you get to add to your positions a little lower average down, which is not a bad idea if it's a long-term hold. So you don't want to put all your money in right now. All right, we also want to have a quick look at, I want to look at Tesla. Now, this is getting silly. The move is parabolic. The stock's up, threefold. It's just, to me, it doesn't make any sense. This is speculation run amok. And anybody who thinks it's anything other than that, I'm not sure they understand really what it is. I don't care that the company's now making money. I don't care that their Chinese orders are better than expected. I don't care. The valuation is not justified. And when you see these parabolic moves, this is indicative of trading, folks. This is trading. This is short covering. This is short covering. This is short covering. This is short covering and just stupidity. Okay. And so when it comes back down, then that's a reality check that something stupid is going on here. And I wouldn't want to be the person holding the trade up here, because good luck with that. Can't bet against this stock simply because look at the action. Because there's always a big short position in Tesla. It's hard to bet against it and be right, because for the most part, you bet against Tesla, you're going to get your head handed to you. So doesn't mean people don't do it, because everybody who does it is of the belief that at some point it's going to be game over, and they're hoping to catch it. So are they right? In my opinion, they're right. But what's happening here is just a tremendous amount of constant shorting, constantly, at least maybe around the 10% range. So 10% thereabouts of the float. And ladies and gentlemen, the problem here, if you don't know and don't understand, is there aren't that many shares outstanding. There's 185 million shares outstanding. Elon Musk controls a lot of those. And guess what? There's only 147 million shares floating. That's why this stock trades like that. It's not 500 million shares. It's not a billion shares. It's 147 million shares floating. So you have a 10% position against that, a short 10% against that float. You're going to have to cover. You're going to have to cover. You can't withstand it, because you have to. Otherwise, if you don't actually cover, you get bought in, which means that your brokerage will automatically just buy the stock at whatever price they can get it to cover your short. Why? Because they're being asked for the shares back. And that's how a lot of shorts get squeezed. That's how you get this kind of trading activity. There's a lot of gamesmanship going on. There's a lot of folks who are betting against that, who don't understand that they can get bought in. They think they can hold on to their position in the weather, but no, they get bought in and they have to cover. They're not doing the buying. Their brokerage is just going out and buying it at any price, paying the offer to get the shares, to deliver to them somebody who wants the shares, maybe because a legitimate owner of them wants to sell them, and they have to deliver the shares to the new buyer. So we've got a lot of that going on. Just a mess. So this to me is problematic. This is just, speculation run amok. And does it mean anything? No. Does it mean Tesla's a great company? No. It just means the stock is easily run up and down, more easily run up because of the small float. All right. Last but not least, we're going to have a quick look at a couple of some of the Chinese stocks that we talked about. And here's this ugly reversal I was talking about here. This is Baidu. And, it's a heck of a run. We talk all the time here about filling gaps. And there we go. Filled the big gap on the way up there. Bam, right down, filled the gap. So we're filled that today. So we had that really nice run up yesterday, and then we closed on the low. And then today we filled the gap right back down. That's an ugly turn. Okay. That would give me pause. I just don't like to see this kind of crazy action here and this kind of crazy action here. And what's been going on in Chinese stocks in China has been nothing short of crazy speculation. And even the government is questioning the sanity, not the sanity, but the hype and the speculative nature of the rise of the onshore Chinese markets. The exchanges have just seen crazy volume, and it's very reminiscent of what's happened here. These are retail buyers in China who are bidding up these stocks in the last 9 days. Just tremendous run, and they're borrowing to do it as if they're not going to fail. Why? Because the government's not going to let them. The government has come out and said, "Oh, we will. Do not think that we've got you speculators covered." So maybe the rose has just kind of turned over a little bit for Chinese stocks because of that. We're going to just have a quick look at JD. You're just going to see the same thing. So JD.com, again, this ugly turnaround there. That to me, when you see that kind of turnaround, if it doesn't correct itself very quickly, that's problematic. And it's Square. Well, lastly, we'll look at Alibaba. because that was another one we spoke of earlier. Same thing, really ugly there. I mean, look at those bars are so lengthy. That's a lot of action intraday. That's indicative of a lot of speculation and trying to figure out, is this thing going higher? Is it peaked? And it certainly rolled over in an ugly fashion. So is the game over? I don't know. I'd be cautious. And last but not least, we Square, same thing. Got an ugly turnaround, and that's worrisome to me. Again, it's the same pattern. We're seeing that pattern. That's worrisome. As nicely as we have rallied, we're starting to see some stocks exhibit these kind of turnarounds now in the last few days. And does that mean the rally is over? Does that mean things are going to turn around and head back down? No, it doesn't mean that. It means it's time to really be cautious and consider taking profits, because it could happen. Because again, you look at the ascent of some of these stocks. This can't go on forever. It can go on for a long time, but not forever. All right. So again, we're talking about parabolic rise. Okay. We're fine so far, but I'd hate to have this thing down somewhere, anywhere down here, and have it come up to here and not get out, and then see this thing come right down, maybe down to its 50, down to like the low 90s. It's a lot. It'd be a lot of money to leave on the table. So be careful about leaving profits on the table. I want to see quick view of any questions, and we'll travel on. All right. I don't see any other questions. So I'm going to quick gander, see if there's anything new. Just refresh my screen. Oh, got a couple there. I think I got all of these. All right, everybody. Thanks for being with me. Have a wonderful afternoon, and I'll catch you on Thursday. Cheers. Be safe out there.